Party music, baby. Welcome back to Brassionomics. Geoff Lakman joins us with Lakeshore Corporation, who works to provide stable long-term growth to investors while delivering quality, sustainable real estate products to the community. Community comes up again. How you doing, man?
That's good. Thanks for having me.
Yeah, Geoff, absolutely. Well, you know, we were just talking about real estate and the location piece and the price piece and the physical piece, and you know, a lot of people, that is important to them in buying their home they want to live in, but it can also be really important in buying an investment.
It's a big deal in buying investment. We work with a lot of investors that look for location. You may not get the cash flow you would in a outer line area sometimes, but your rate of return's lower. But from a cash flow piece, but from an equity standpoint, you tend to do much better than an outer line area, you know, in a rural community.
So, I mean, really, that becomes location. You think is almost, I mean, more important from the investment standpoint, maybe.
It depends on what you're looking for.
Yeah.
You know, if
what are some things people are looking for right now?
Security. If you're looking to protect your money and you don't want to take a big risk, and I think location's great, and you go for something that's stable, that's predictable. You know, if you go out a little further, you can go out to, right now, we have property out in Snoqualmie and North Bend that's doing really well, but there's a casino there with 3,000 employees, and, you know, before that, it wasn't the best investment for us. So if you go to areas like that, now if the casino goes away, then we might have a problem.
I would say so.
Yeah. But if you're in downtown Kirkland, Bellevue, Seattle, I mean, this area is just, it's such a great economy. We kind of have a little bubble here. And we have
almost little microcosm. I mean, little micro areas, though. I mean, you can think, well, Seattle as a whole is great.
Yeah.
But then you can think, well, downtown Bellevue is great, but maybe a different part of this Bellevue maybe isn't so good for an investment.
Yeah, we had a property on the east side area that we had an unsolicited offer on recently that, you know, we bought in 2009, and already a few years later, we're getting an offer that's much more than what the investor paid for it. So, I mean, that's a difference. I've never had an unsolicited offer in Snoqualmie.
Really?
No.
So the casino must be booming.
Yeah, the casino's doing pretty good, I think.
I would imagine they
got that free bus that comes down and picks you up.
I think, man, they'll send limos. They'll do anything to get you there.
Yeah.
They'll do anything. We're here with Geoff Lakman with Lakeshore Corporation. Geoff, so, I mean, when people are thinking about real estate investments, you know, whether it's in North Bend or whether it's in Bellevue, I mean, what does that mean? I mean, what can people actually focus on when they think, I want to invest in real estate?
I think, you know, it depends on the person and their experience. I think for most people, they start off with a rental house, a single family home, and go up from there to a duplex, a 2-unit, 3-unit, 4-unit property. And I think those are the best ones to start with. If I were buying something, I would buy a 2 to 4 unit property. It's long-term money, 30-year money. The rates are, well, you probably know better than I.
They're like in the threes.
Okay. So 3% range. And for non-owner occupied, it's a little bit higher. But still, that money is set for 30 years or 15 years, however long you want to take that money out for. When you're buying a commercial piece of property, those loans are not set for that long. There's 3, 5, 10 years. They may be amortized over 25, 30 years, but in 5 or 10 years, you got to do something with the property or with the loan. And where you have a 2 to 4 unit property, you can have that property for the next 30 years. And so if you're a believer that interest rates are bound to go up and they're going to go up in the next 5 to 10 years, it's a little scary to buy a large commercial piece of property where the interest rates are going to reset on you. Whereas if you buy a duplex, fourplex, well, unless you refinance or do something, that loan's set for the next 20, 30 years, depending on what type of loan you get.
Yeah. So, I mean, when we talked about, with Stephen just a minute ago, kind of about that location and the physical attributes and the price, price really almost comes down to the financing piece. Even, of course, it does on a personal home, but on an investment, almost more so. It talks about kind of talking about the security of a long-term loan versus maybe what wouldn't be so secure in a commercial loan.
Right. On a multifamily piece of property, those are really hot right now because financing's really attractive. You can borrow up to $50 million on a Fannie Mae multifamily loan in the 4% range. I mean, it's ridiculous. But from a commercial piece of property that has maybe retail or office, the rates aren't as attractive. The loans are typically recourse, which means you have to personally guarantee it. Whereas in a Fannie Mae loan, they're typically non-recourse for multifamily. So those are really attractive pieces of property. And there's two different financing vehicles.
Yeah. So do you tend to think that people make choices when it comes to investment in real estate on the finance? Do you help people maybe understand, like, look, this is a money deal. This is not what you like deal.
Yeah. We try to educate them on that and just give them what our experience has been. But by all means, financing is huge. That's what fueled this boom in housing, where you had people that owned their house. They owned 2 to 3 rental properties. They owned a second home, and they never had any experience doing that before. They just did it because their neighbors were doing it. They were making money, and
everybody was doing it.
You could buy houses that were non-owner occupied homes, 0 down, and
negative amortizing.
Yeah, with no income documentation, and now it's changed back to a little more of a standard process to where
it was a bit silly.
Yeah, it was. It was great.
I mean, anybody and everybody, and so you get into this. So now it seems like, from an investment standpoint, when you look at the investment piece of real estate, at least, the stability is probably there because the financing is more stable.
Yeah, it depends on what type of property you're buying. If you're buying a commercial piece, it may not be as stable because some of those spaces are still vacant. But if you are buying a multifamily piece of property, I think those are great investments. Personally, I think they're great simply because the rental market's hot right now. A lot of people are selling their homes on a short sale. They can't buy. Their credit's a little banged up. And I think it's going to be that way for quite a number of years.
So then how do you quantify if real estate investing is right for someone? I mean, a client comes to you and says, maybe their credit is good, maybe it's banged up, maybe they're interested in commercial, or how do you make that decision?
We don't. We help them see all the pieces of the puzzle and help explain the process, help explain what their options are. And it's up to them to decide if it's right. I can't make that decision because maybe they want a 12-15% rate of return on their money. That it's going to depend on what they want out of the investment. I had a friend actually call me this morning, and his mother sold a huge piece of property that had been in the family for 30, 40 years. And she, instead of rolling that over, 1031 exchanging that property into another property, she cashed it out and put into tax-free bonds. And he was upset because he wanted her to roll into real estate and something that could produce a cash flow and appreciation through that. And she wanted the tax bonds. So it was her decision, it was her money.
Yeah, that's right. Well, Geoff, we do have to go to break. Let's stick around for a few minutes,
okay,
and we'll bring everybody back and just kind of get some more opinions of what's going on. That's Geoff Lakman with Lakeshore Corporation. I'm Ben Brashen. We'll be right back.